Imagine waking up one morning to find out that the way you send money across the world has fundamentally changed, overnight. That the days of watching your hard-earned cash crawl through a labyrinth of banks for days are over. Fees that once ate into every transfer are now mere cents or less. And the backbone of the world's financial system? It's no longer the decades-old SWIFT network. Instead, it's powered by a blockchain-born underdog, Ripple's XRP. This isn't just wishful thinking. It's the vision Ripple's CEO, Brad Garlinghouse, insists is not a decade away, but happening right now. But can Ripple and XRP really dethrone the banking world's Goliath, SWIFT? And if so, what stands in their way? Today, we dive into the battle shaping the future of global money. To understand Ripple's audacious bet, let's rewind to the beginning, the world before digital money moved in milliseconds. For most of modern history, moving money across borders was slow, expensive, and shrouded in mystery. Picture this. A factory worker in Nigeria wants to send money to her cousin in the Philippines. The money hops through a chain of intermediate banks, each pocketing a fee, each introducing risk and delay. For the average person, international transfer fees could devour a week's wages. For corporations, remitting millions, friction meant lost opportunities and wasted capital. Then, in 1973, the Society for Worldwide Interbank Financial Telecommunication, SWIFT, emerged, promising a better way. SWIFT didn't actually move money, but standardized the messages banks sent to coordinate transfers. Suddenly, thousands of banks worldwide had a common language. But under the hood, SWIFT was still built atop the creaky bones of correspondent banking. Transfers could still take days, with costs and delays compounding along each step. In the era of instant messaging and global e-commerce, SWIFT's limitations became glaring. Enter the 21st century and a new breed of innovators, those who saw blockchain as more than just the engine for speculative tokens. Ripple, founded in 2012 by Chris Larsen and Jed McCaleb, wanted to do more than just disrupt. They wanted to rewire global payments for the internet age. Unlike Bitcoin, whose mission was to cut banks out entirely, Ripple's vision was radical in a different way. Work with the banks. Build a bridge, not a revolution, for mainstream finance. Ripple's technology, anchored by its cryptocurrency XRP, aimed to fix what SWIFT couldn't: speed, cost, and transparency. With settlement times as fast as 3 to 5 seconds and transaction fees measured in fractions of a cent, Ripple positioned itself as the answer to an industry desperate for change. Banks wouldn't need to pre-fund accounts in every country or wait days for confirmation. They could move value nearly in real time, anywhere, anytime. That promise began attracting serious attention. By 2025, Ripple had inked deals with more than 300 financial institutions worldwide. Standard Chartered, a banking behemoth, completed its first cross-border trade finance transaction using Ripple's technology. In Africa, Ripple's partnership with Onafrique opened up seamless money flows for 40 nations starved of efficient banking infrastructure. In the Middle East, Ripple snagged the backing of the UAE's Zand Bank and Mamo, targeting regions hungry for innovation. The numbers tell a compelling story. Ripple can handle about 1,500 transactions per second, 15 times more than SWIFT's legacy network. While a SWIFT transfer can take up to 5 business days, an XRP payment is done in seconds. And fees? Try $0 and $0 per transaction versus SWIFT's $5 to $50 range. For small businesses, migrant workers, or multinationals, that's not just convenience, it's a revolution in economic opportunity. Still, none of this happened in a vacuum. Ripple's vision drew both enthusiastic allies and fierce skeptics. Traditionalists scoffed at the notion that a blockchain startup could dislodge a network guarded by central banks and governments. Regulators cast a wary eye, fearing money laundering, fraud, or destabilization of the precious status quo. And then there's SWIFT itself, a titan moving $5 trillion every single day, deeply embedded in the pipes of global finance. But perhaps the most surprising twist in Ripple's journey wasn't the technology. It was its willingness to embrace the very institutions most crypto diehards wanted to destroy. Brad Garlinghouse, Ripple's outspoken CEO, has made collaboration, not combat, his mantra. "We underestimate how big that change is and how profound it is," he told a cheering crowd at the XRP Las Vegas conference, urging his community to see the bigger picture. For Garlinghouse, competition with Bitcoin and other cryptocurrencies isn't the main event. Instead, he's openly courted alliances, hinting at partnerships with Cardano, donating symbolic gifts to Bitcoin proponents as peace offerings, and evangelizing a future where crypto grows by expanding the pie, not fighting over crumbs. We get there by being collaborative and working together and not against each other, he insists. That's not just talk. Ripple's ongoing work with industry rivals and even central banks echoes this ethos. But beneath the optimism, the obstacles Ripple faces are formidable and only growing. Chief among them, regulation. Since 2020, Ripple has been locked in a grinding legal battle with the U.S. Securities and Exchange Commission, SEC, over whether XRP is an unregistered security. Billions of dollars, and the fate of Ripple's U.S. ambitions, hang in the balance. The case is expected to finally conclude by the end of 2025, and the outcome could tip the scales for the entire industry. Regulatory uncertainty isn't the only storm cloud looming. As Ripple's ambitions grow, so does the competition. New players like Remitix, RTX, are rushing to fill the same niche, while central banks experiment with digital currencies, CBDCs, that could, in theory, bypass both SWIFT and Ripple. The Bank for International Settlements is already testing CBDC interoperability on Ripple's network, a hint of both validation and existential risk. Tech giants, too, are circling. What if Amazon or Google launch their own cross-border payment rails? And even if Ripple becomes the backbone for global banks' money movement, can it scale securely to handle the floodgates of trillions of dollars per day? Eswar Prasad, a leading economist from Cornell, sums up the stakes. Regulatory clarity is essential for the widespread adoption of cryptocurrencies and blockchain technology. Without clear rules of the road, banks and investors may hesitate to jump in, no matter how fast or cheap Ripple's rails become. The vision of frictionless instant global payments is tantalizingly close, yet tantalizingly elusive. Ripple is betting not just on technology, but on alliances, legal wins, and the willingness of an entire industry to embrace change. As Garlinghouse put it, we are focused on building real utility for XRP and transforming global payments. But as 2025 unfolds, pressure is mounting. The SEC's ruling could make or break Ripple's U.S. future. Rivals are rolling out new products. Old guard institutions are hedging their bets. Will Ripple's collaboration over competition mantra be enough to overcome regulatory minefields and fierce rivals? Or will a single misstep send XRP back to the margins? As Ripple stands at the crossroads, bolstered by new partnerships, threatened by lawsuits and relentless competition, the real question emerges. Can one blockchain company really rewire a financial system that moves tens of trillions every week? And with answers looming just around the corner, the future for Ripple, XRP, and the very foundation of money itself hangs in the balance. As we stand at this critical crossroads, many are wondering, what does the future truly hold for Ripple and for the very foundations of global finance? Let's explore the possible scenarios, the profound consequences, and, most importantly, what this all could mean for you right now. Picture this. It's the year 2027. Banks from Dubai to Dakar, Zurich to Singapore are routing instant cross-border funds through RippleNet. The average remittance fee has plummeted, with transactions confirmed in under 5 seconds. The old days of waiting anxiously for an international wire transfer? Forgotten memories. Even Standard Chartered has made headlines, calling their historic first trade finance transaction on Ripple a sign of a new era. But how do we reach that world, and is it inevitable? The path forward for Ripple and XRP is anything but straightforward. There's a high-stakes game at play, with powerful incumbents, regulatory wildcards, and new challengers eyeing the same prize. First, the regulatory gauntlet. The outcome of Ripple's legal saga with the SEC, expected to be decided as soon as late 2025, could change everything. If Ripple secures a decisive win, removing the shadow of uncertainty that's dogged XRP for years, experts predict a cascade of institutional money and partnerships. We could see U.S. giants currently sitting on the sidelines flood in overnight. But if the ruling goes against Ripple, watch for a hard pivot toward international markets, especially the crypto-friendly Middle East and Africa, where Ripple has just inked new deals with banks like Zand and Mamo. This isn't just speculation. As Catherine Coley from Binance US notes, regulatory uncertainty in the U.S. is hindering the growth of the crypto industry. Ripple's global playbook may offer the perfect hedge, continually expanding where the rules are clear and the appetite for blockchain is enormous. In Africa alone, 40 nations are on-ramping to Ripple's network thanks to the On-Afrique partnership signed in April 2025. The UAE, ranked in the global top tier for crypto adoption, is fast becoming Ripple's regional stronghold. Second, consider the competitive threat. Fintech startups and even central banks are moving fast. Central bank digital currencies, or CBDCs, are on the rise. The Bank for International Settlements is already trialing Ripple's XRP ledger for interoperability between digital currencies, a massive validation of Ripple's tech. But CBDCs could also mean stiff competition, especially if national governments throw their weight behind homegrown networks. As Kristalina Georgieva of the IMF warns, CBDCs and stablecoins could improve cross-border payments but require international cooperation. Ripple's secret weapon may be its collaborative approach. CEO Brad Garlinghouse insists, "We get there by being collaborative and working together, not against each other." Ripple is partnering, not just with old guard banks, but also with crypto rivals like Cardano. This isn't a zero-sum game. Instead, Ripple is aiming to be the connective tissue binding disparate networks together, a bold vision straight from ex-Ripple executive Marcus Treacher. The future of payments lies in interconnected ledgers, with Ripple playing a key role. And let's not forget technology itself. Ripple's network already handles up to 1,500 transactions per second, at a near negligible cost of $0.002 per transfer. Compared to Swift's glacial pace, just 100 TPS and multi-day settlement, Ripple's advantage is plain. Still, as volume explodes, security and scalability will be the ultimate test. One major breach, and trust could evaporate overnight. A third wildcard is the rise of new applications for XRP. Beyond just payment rails, Ripple is now moving to integrate XRP into loyalty programs, supply chain financing, and soon, stablecoins. The upcoming RLUSD launch in late 2025 has insiders buzzing. Imagine businesses sending cross-continental invoices or settling trade instantly, with price stability built in. This broadening of use cases could turbocharge XRP's adoption, making it more than just a speculative asset. Of course, not everyone is convinced that Ripple will dominate. Critics note the rise of rivals like Remitix and the cold inertia of banking giants who are notoriously slow to change. Swift itself isn't sitting idle. It's piloting faster, blockchain-inspired upgrades, and could yet retain its crown through sheer market inertia. As Cornell's Eswar Prasad says, regulatory clarity is essential for the widespread adoption of cryptocurrencies and blockchain technology. If Ripple can secure this clarity and keep innovating, the upside is enormous. But even the most bullish experts admit, nothing is guaranteed. Digital G, the former fund manager and XRP advocate, claims XRP could replace Swift entirely, leading to a significant increase in its value. But that's still a matter for the future. So, what does this looming transformation mean for you? Why should you, whether you're a crypto enthusiast, an investor, or just someone who sends money overseas, care about this battle for the future of global payments? First, let's get practical. If Ripple achieves its vision, international money transfers could become as easy and cheap as sending an email. Today, the fees and delays for moving money across borders cost families, small businesses, and even large corporations billions per year. Ripple's system strips out the intermediaries, drops fees to a fraction of a cent, and shaves days off settlement times. For migrant workers sending remittances home or businesses facing cash flow bottlenecks, this could be life-changing. Second, financial inclusion. With partnerships like Onafrique, Ripple is opening up real-time payments access to millions across Africa and the Middle East. In many developing countries, banking infrastructure is either expensive or outright inaccessible. Blockchain-based solutions like Ripple offer a chance to leapfrog straight to the future, bypassing the broken rails of the past. Reese Merrick, Ripple's managing director for the region, puts it simply. Acquiring a digital assets license in Dubai enables Ripple to better serve the demand for solutions to the inefficiencies of traditional cross-border payments. For businesses, the benefit is no less profound. Imagine reconciling invoices, managing supply chains, or rewarding customer loyalty instantly and transparently without the friction of old systems. Integrating programmable payments, thanks to the blockchain, could unlock new forms of commerce and potentially new revenue streams for companies ready to adapt. And for investors, understanding this shift is crucial. Whether or not you believe XRP can dethrone Swift or explode in value, the transformation of the global payments landscape will create both risks and unprecedented opportunities. Early mover advantage may reward those who do their research and punish those who ignore these revolutionary undercurrents. But there are also essential cautions. The regulatory landscape is shifting fast, and not all jurisdictions treat crypto assets the same way. Security remains paramount. As adoption grows, so does the risk of fraud and cyber attacks. And as we've seen, old habits die hard. Institutions, especially the largest banks, are slow to embrace change unless compelled by clear and overwhelming benefit. Equally, the winner of this race is far from certain. Swift, Ripple, emerging CBDCs, and nimble fintech startups like Remitix could all coexist, carving out their own niches. The smart money is on interoperability. Not every bank or business will use the same rails, but the ones that can connect across networks will lead the pack. So what are the lessons to take away? First, keep watch on the regulatory headlines, especially as Ripple's SEC case nears resolution at the end of 2025. This will likely be a watershed for the whole industry. Second, if you're in business or banking, explore how integrating blockchain-powered payments could open up new efficiencies, markets, or products. The tools are being built now, and those who experiment early may gain a formidable edge. Third, as a consumer or remittance sender, ask your bank or payment provider about blockchain-enabled money transfer options. The age of opaque fees and week-long transfers is ending, and the more consumers demand better service, the faster adoption will accelerate. And finally, always diversify, and never bet more than you can afford to lose. The world of digital assets is volatile, and while the upside could be extraordinary, the risks are real. So, let's return to our big question. Will Ripple overcome the odds to dethrone Swift and reshape global finance, or is it doomed to remain a promising outsider? Based on all the momentum, partnerships, and technology in motion, the answer is both more exciting and more nuanced than the headlines suggest. Ripple is already rewiring parts of the banking system, building bridges between worlds that were traditionally siloed. Its network reaches hundreds of institutions, and every month brings new announcements: staking services in Tokyo, loyalty integrations, new stablecoins, trade finance pilots in Africa and the Middle East. But the full transformation won't happen overnight. Swift, with its entrenched inertia and decades of trust, will not disappear in a flash. More likely, we'll see a hybrid future, networks like Ripple operating alongside, and sometimes underneath, the legacy arteries of global banking. Over time, as more institutions connect, and as regulatory clarity emerges, the center of gravity will shift. Ripple's daring bet is that 10 or 20 years from now, we'll look back and marvel at how radically payments have changed, and wonder why we waited so long. The real secret? As Brad Garlinghouse confided at a recent conference, we underestimate how big that change is and how profound it is. The transformation of cross-border payments may seem technical, but its ripple effects, no pun intended, could empower millions, reshape business models, and even influence geopolitics. So, what will you do with this knowledge? Maybe you'll reevaluate your investments. Maybe you'll explore new tech for your business. Or maybe you'll just refuse to pay another outrageous wire fee. Whatever your next step, one thing is clear. The future of money is being built now, and Ripple is at the heart of the action. If you found this deep dive valuable, don't forget to like, subscribe, and share your thoughts in the comments. What do you think? Can Ripple truly replace Swift, or is the battle just beginning? And if you want to stay ahead of the next big shift in finance, hit that bell for notifications. You won't want to miss our upcoming break.